Let it be. Okay, here's what you got to do. You got to let it be, people. You got to let it be. Here's what's going on in the markets in 90 seconds. There's been this enormous shift from individual risk in stocks to the indexes. In other words, people are like selling Microsoft because they're afraid of the software problem, and they're going, how bad is that problem? Okay, this is per Jeffries. I just posted it in a note on Substack for everybody. The capital expenditures to build out AI is going from 12% of, hold on, 12% to 34% of revenue, not earnings, revenue. Okay. For those of you who are sort of new to finance, just take the next statistic and you'll really understand. The cash flow going into CapEx for AI from the hyperscalers or the Mag 7 is pretty much the same thing, is going from like 30 some percent to 83% of all cash flow. All the money coming in the checking account of Microsoft goes right back out the door to buy things that will burn up in 3.5 years. Let me give you an analogy. It would be like the Pittsburgh Steelers announced that they are very proud to announce a $100 million 2-year deal with Aaron Rodgers, and that the rest of the players are going to be provided for by the North Allegheny High School. I mean, it's sort of a joke, but it's sort of not. In other words, 83% of the money of the hyperscalers is going to go buy things that have the life expectancy of Aaron Rodgers. That's like sort of a joke and sort of not. That's how serious this is. But so the second thing that's going on here, again, the theme here today is like, just let it be. Just see what it is, and just this is happening, and there's nothing anybody can do about it. It doesn't do me any good to come on here and say that the Nasdaq's going down 80%. But what is happening, Linda, is the volatility in the individual names is not showing up in the indexes. Like if you look at the graph of the Nasdaq, it's just going like this. Now, to the markets don't do Warren Buffett anymore. Okay, all the trillions of dollars it's managed, it has nothing to like. It isn't like Charlie Munger, like staying up till 2 a.m, like reading deep into the details of something. Their idea of risk is volatility. And you can go look at the Nasdaq right now or the S&P 500. There's really very little volatility. That to them, that's risk. The fact that the fucking companies are burning through all their cash is terrifying to them. So what they're doing is they're like, they see, money managers have to manage money. Asset managers have to manage it. They can't like turn the lights out and send everybody their money home. They're back their money. So they're looking at the volatility in the individual stocks, namely that they're going down, that the fundamentals of these companies are terrible, and the money's just shifting into the indexes. Now, in your 401k and your IRA, you probably own a lot of tech, but you probably are diversified into the indexes. The takeaway from this is if the volatility starts to show up in the indexes, there's the only thing that can prevent a complete nuclear meltdown is intervention from the Fed, the U.S. Treasury, and BlackRock. And the problem is those are all the same thing. Which means that ultimately the markets would become a giant call option on Donald Trump. Okay, what's that looking like right now? Well, they eat kids. They eat kids. So really, you're going to go from the Mag 7 to the indexes to Epstein. Yes, because the whole thing together is just a confidence game. There's nothing in the numbers. Volatility is not risk. If the most profitable companies in the United States are going to put $1 trillion or $2 trillion or $3 trillion into Aaron Rodgers, you get the joke? The things that won't be here in 4 years. It's just all going to burn up the excess cash flow. And then we're going to look across the fruited plains and go like, well, there's some coal up there. We could maybe raise some beef cattle. And they stopped drilling in the Bakken. Like, there's nothing there, people. There's nothing in these indexes other than people buying the indexes because they don't move. So it's always been my thesis that we're not really even in a financial situation. We are in a giant confidence game. And, I don't do this because it's my parents raised me this way.